Welcome back to the StockTA podcast. I'm your host, Kevin Steuer. Today, we're focusing on one of the most compelling near-term gold producer transitions in North America. We're looking at LaFleur Minerals, ticker LFLR on the CSC and LFLRF on the OTCQB. Please note this interview is being disseminated on behalf of LaFleur Minerals. While most junior gold producers face multi-year permitting delays and massive capex hurdles to build processing infrastructure, LaFleur owns 100% interest in a fully permitted, recently upgraded mill right next to the heart of Quebec's prolific Abitibi Gold Belt. They're executing a hub-and-spoke strategy, feeding their Beacon Gold Mill with high-grade ore from the nearby Swanson Gold Project. Joining me to break down the corporate strategy and financial roadmap is LaFleur's chairman, Kal Malhi. Kal, welcome to the show.
Thank you, Kevin. Thank you for taking the time.
Yeah, so we just had a little bit of a conversation before we recorded, but you guys are really in an interesting spot here, and it looks like you're about to restart the Beacon Gold Mill. Can you explain kind of what that process looks like and just a little bit of an overview of the company?
Yeah, Kevin, as you spoke, we acquired assets that are fully permitted and located in one of the best gold belts, in the Abitibi Gold Belt in Val-d'Or, Quebec, which is one of the best mining towns. We acquired these assets 2 years ago before the price of gold started to run above $2,000 US. They were acquired in a bankruptcy from Monarch Mining. We won the bid to the Beacon Gold Mill and the Swanson Gold Deposit. Probe Gold won some of the other assets. And we've been building at LaFleur Minerals since then. We've raised about $20 million since we acquired the assets. We've deployed that to restart the Beacon Gold Mill, which last operated at around $1,800 US an ounce gold. And it's permitted. It's got a tailings pond, and we will be restarting in the next 4 to 6 weeks. We also acquired the Swanson Gold Deposit, which was a small 160,000 ounce deposit, but we've been getting phenomenal drill results. We announced over 200 meters at 2 grams per ton, plus about 180 meters. So we've been really hitting exceptional results, and we're planning on an updated resource calculation at our Swanson deposit in the coming months as well. So as a gold company, we're a small gold company with a small mill. The Beacon Gold Mill is about 1,000 tons per day, but we're located in a prolific gold mining town, gold mining belt. And we're going to start production with gold prices now at 4,000 or 4,500 US an ounce. And we will be expanding the mill as well as expanding on our deposit, where, as I said, we've been getting phenomenal drill results.
If I remember correctly from your slide deck, didn't you already have a PEA out on Swanson, and it was like after-tax IR like 65%, and that was at gold at like 2,500 or 2,700?
Yes, Kevin, we did a PEA based on the 160,000 ounce open pit, the deposit that we have at Swanson. Again, that's on a mining lease, which is permitted, and that would feed the Beacon Gold Mill immediately. So that's our immediate gold production plans. But beyond that is to expand the deposit at Swanson. We're also expanding the size of the Beacon Gold Mill. Now it's about 1,000 tons per day. We have an offtake agreement with one of the largest gold trading companies, Trafigura, where they're conducting due diligence, and they'll be providing us funding in installments of 30 million at a time to increase the size of the mill at 1,000 tons circuits at a time. And each 1,000-ton circuit is a $30 million expenditure that they're willing to fund with an offtake agreement that's non-dilutive.
Okay, so you guys are getting good drill results. You're going to update the economics, which, I don't want you to say what they are ahead of time, but they should improve because you did it with the gold price at 2,700 or 2,750, and now gold's over 4,000. So you guys feel pretty confident that the project is economical?
Yes, Kevin, our PEA factors in a cost of $1,600 Canadian per ounce is our cost. And, when we look at gold at 4,000 an ounce, a few months ago, it was 5,500 an ounce. People say the price of gold is down. Well, our cost is 1,600 Canadian, and the price is 4,100 US. So in our view, the price of gold is phenomenal for us, and the economics at Beacon are phenomenal for us, and our location in the Abitibi Gold Belt and the results we're getting in this gold market, I believe, offer a compelling gold opportunity for investors looking to put gold in their portfolio.
Did you mention, I mean, what's your CapEx look like to restart all this?
Right now, we've raised, like I said, we raised 20 million, and within that, we will be back into production at Beacon. We have allocated about another 5 million towards drilling at Swanson. So right now, we're funded. We closed 11 million about 2 months ago, and that was a bought deal that was completed just before the price of gold corrected. And again, we have Trafigura willing to finance us going forward. So I believe we're well funded. We're on track to start production soon. And, we're also hopeful that, we've seen a correction in the market this summer. And I believe the thesis is that with the situation in Iran, with the midterms, there's a lot of capital sitting on the sidelines, and that we're hoping that once those two issues are resolved, that capital will flood back into the market and we'll see a buoyant market again.
Yeah, you mentioned the raise you just did. I want to bring up your share price here. So here you are on the OTC. You guys are down about 50% since, I'd say, March. But you're starting to form a bottom here, and our algo has you guys as neutral for overall and short term. You have some pretty heavy resistance at 23 cents, but you're trading at 21 cents. Do you think some of those shares that were part of that deal have been kind of dumped into the market, and that's why you sold off a little bit?
Yeah, Kevin, what we've seen, and if you correlate that chart, is the price of gold that correlates to that per chart as well, right? We've seen the price of gold come from 5,300 US down to 4,000. So that's part of the reason. And the other reason is, yes, some of the placement that we closed on the bought deal did come out into the market, and it was met with a weak market this summer, which isn't just us, it's been the general market for commodities in general.
Yeah, I mean, a lot of the juniors, and whether it's gold, silver, a lot of them have sold off the past couple months. So do you think this is, with the news flow you guys have coming, like if you're a value investor, do you think this is a possible good entry point here?
Kevin, as a chairman, I'm not allowed to give investment
Yeah.
advice, but if I was to give you a summary, we're well funded. We closed 11 million at 50 cents on the hard dollar, 67 cents on the flow through 2 months ago. And that was a bought deal where institutions could have backed out, but they didn't, and we closed that. And since then, the market's corrected. But we also have this Trafigura deal pending. Their final due diligence is a site visit on August the 10th. And I believe once we finalize that, once we finalize, our first gold pour at Beacon, we should get a re-rate on the stock.
With you guys having a mill that's going to be in production, if you don't use up all that capacity, is there demand that you could help make some profit on that part or that side of the business with other mines nearby?
We are surrounded by gold deposits in the Abitibi Belt, Kevin, but I want to stay away from being a custom milling mill. We want to be our own gold producer. We believe we have our own asset nearby that's permitted, that's on a mining lease, and there's no need for us to build somebody else's. Or when we've got our own resources and the ability for M&A to acquire other deposits near the mill with a partner like Trafigura once, and if that deal is finalized, is very strong as well. So we don't want to be a custom milling company. We want to be a full three-tiered gold mining company.
But you guys are lined up. I mean, the stars are kind of aligning perfectly. Like you have the right size resource for the mill that you've expanded to fit that. So you should be pretty efficient operating that, correct?
Yes, and Kevin, one of the issues in mining is permitting, right? And we have all three assets that are permitted. Our Beacon Gold Mill is permitted. Our tailings pond, which is adjacent to the Beacon Gold Mill, is permitted. And our Swanson Gold Deposit, although it's the 160,000 ounce open pit, is permitted as well. So permitting is often one of the biggest hurdles in mining, and we've got all three assets that are permitted and ready to go.
Nice. So if we look at your chart between now and year end, what do you think will be the biggest fundamental driver of the company?
I think there'll be several factors. One will obviously be the Trafigura event, finalizing that partnership. Second will be the first few gold pours to prove out the metallurgy and the efficiency at the Beacon Gold Mill. And the third will be the upgraded mineral resource at Swanson. Like I said, the last few assays we've had have been phenomenal. And we believe our target is to get that over 1 million ounces within the next months and do an updated resource calculation.
Okay. Awesome. Well, thank you so much for the overview. For investors who are looking for more information, where can they find more about LaFleur Minerals?
Our website is simple again, LaFleurMinerals.com as well. I mean, if you can't find that, if you simply Google LaFleur Minerals, or we're fairly prominent online and social media as well.
Okay, awesome. Well, that wraps up today's episode of StockTA Podcast. If you're watching on YouTube, please hit the subscribe button so you don't miss our next CEO deep dive. I'm Kevin Steuer. Thanks for joining us.
Thank you, Kevin.